Hi, everyone, and welcome to our 2021 end of year food and beverage roundtable. My name is Pooja Nair. I'm a litigation partner at Ervin, Cohen, and Jessup, and the head of our food and beverage practice group. It's a pleasure to have our distinguished group of panelists here today, and I will give everyone a short period of time to introduce themselves. So let's start with Barbara.
Thank you, Pooja. I'm Barbara Castiglia. I'm the executive editor of Modern Restaurant Management. Modern Restaurant Management, or MRM Magazine as we refer to it, is an online magazine for restaurant operations. We focus on anything from grease trap maintenance to restaurant flooring to hiring and everything in between. We publish every day, all new articles, and Pooja has been great to be one of our columnists for a few years now, giving her legal insights. So please look us up if you get a chance. Happy to provide you with more information.
Don?
Thanks, Pooja. Hi, everyone. My name is Don Snyder, and I'm a partner with the CPA firm of GHJ, and I lead our firm's food and beverage practice. And we are a regional accounting firm, and we provide accounting, tax, and consulting services for food and beverage companies ranging anywhere between $10 million to close to $1 billion in revenue. All walks of life on the food and beverage side. Thank you, Pooja.
Thanks, Don. Glad to have you here. Bob?
Hi, good morning. Bob Woolway with FocalPoint. We're a middle market investment banking firm. I've been doing investment banking for quite a long time, previously at larger firms like Merrill Lynch and JP Morgan. At FocalPoint, we do focus on the middle market, providing M&A, capital raising, and restructuring services, primarily working with entrepreneurs and family offices, but also private equity portfolio companies. We have a very robust food practice. We say we cover from the farm to the fork, so it includes growers. We're selling a grower now through branded food companies. We have a better for you beverage company. So we have a plant-based food company. We're selling all the way through restaurants. We're involved with several restaurants, including an iconic restaurant brand based out here. Thank you.
Thank you. And ECJ represents both restaurants and food manufacturers, and we do kind of all sizes from smaller restaurant groups to large groups, but we are mostly focused on California-based businesses, which raises a lot of challenges on the legal front, both in terms of employment law and new continuous legislation. And so the first part of our discussion today is going to be about the challenges that we've seen for the food and beverage industry in 2021. Some of these challenges have emerged and are going to continue to be issues for the industry. And I wanted to start by asking Don and Bob to talk about operational issues in the food and beverage sector.
Oh, thanks. You know what, Bob, I'll kick it off and then I'll pass it on to you. But I kid you not, everyone. Today is National Pretend to be a Time Traveler Day. I'm not joking. So if everybody could channel, I wish everybody could channel their Marty McFly focus and we could travel in the future to when the pandemic is over. It would all be fantastic. Unfortunately, we are in the midst of a pandemic. And as Pooja said, there are some significant challenges in the food and beverage industry. We're going to talk a little bit about supply chain disturbances. We're going to talk about the lack of talent in the labor pool. We're going to talk about inflation, price inflation and other areas as well. But so I'm going to kick it off and talk a little bit about supply chain. Obviously, the disruption of COVID-19 has caused a tremendous impact and a tremendous disruption in supply chain. And it affected all aspects of the food and beverage industry, from the farmers facing difficulties in just managing excess produce to food service distributors and how they find it difficult to adjust to sudden changes in the market dynamics, to food service producers, to consumer packaging companies, and finally the grocery store and grocery retailers. So it's affecting all aspects of the food and beverage industry. And what's interesting is that not only is the supply chain affecting raw materials and the delay that it takes companies to get the raw materials, it's especially affecting the packaging, whether it's glass jars, the corrugated material, the plastics, the metal, the electronics that it's taking to run the machinery. It's affecting all aspects of food companies. It's affecting rail and truck deliveries. They've been delayed just because of the lack of labor shortage. We're going to talk in a couple of minutes about how companies can, in fact, fight some of those supply chain struggles, but it's really, really affecting this the food industry tremendously, as well as other industries. With respect to the lack of talent, and I know Barbara could speak more to that, but it's interesting to note that the National Restaurant Association has released a survey indicating that 60% of fast food restaurants and 80% of full service restaurants have decided to shut parts of their dining rooms in August because they just didn't have enough labor to deal with these particular areas. And in California alone, what's interesting to note is that since May of 2020, restaurants and hotels have added 420,000 jobs, the most of any sector out there. But the industry still remains about 450 jobs short of pre-pandemic levels. So it's just the lack of labor shortage. And when I say labor shortage, it's not just the lowest level, it's qualified. It's qualified employees and the qualified workforce that's making it extremely tight for companies to deal with the labor force. And as a result, companies are forced to go into a lot more overtime, and they're forcing themselves, or they're investing more in innovation and automation. So let me turn it over. I'm happy to turn it over to you, Bob, for some of your comments, and then we could talk a little bit about inflation as well.
Sure, and yeah, I don't want to be redundant, but 2020 was obviously a year of a lot of pivoting and adapting, and doing companies doing the best they could to either take advantage or in some cases having to retrench. But as we got through that and into 2021, I think most operators believed it was going to be a very positive year as we get COVID behind us. And in many cases, you know, they did perform well, and the top line has been strong. But unfortunately, the industry's been faced with a lot of these factors that Dawn's talking about. And so there's really been margin compression or pressure on margins in any case. And a lot of those, again, Dawn touched on the supply chain. In many cases, it's just unavailability of product. And you know, I still see at grocery stores quite a bit of empty shelves where there have been literally just out of stocks with their suppliers. And that used to be such a no-no, you'd get fired by the retailer for that. Now, unfortunately, it's kind of a way of life given the supply chain challenges. Freight costs have gone through the roof. There are operators, clients of mine, who say they would pay $1,500 or $2,500 for a container in times past, and now they're as much as 10 times that in some cases. So freight costs are through the roof. Labor, as Dawn discussed, has gone through the roof, and just all the different inputs, protein prices, ag prices, resin prices driven by petroleum. And as Dawn said, that's led to investment in automation. It's also led to companies trying to take price and take price where possible. It's a growing trend. I saw General Mills announced up to 20% price increases, including brands such as Cheerios, et cetera. So it's definitely a growing trend. I think there's differing opinions about how ready the retailers are to take those prices or agree to those prices. But it's definitely really what everybody's got to be doing in this environment. And the real question is, how much does it lead to food inflation, and how is the consumer going to react? And hopefully, as a country, we're going to avoid stagflation, but the inflation part is clearly there for the time being. And I think it depends which analyst you talk to about the economy and whether or not we may be heading towards a recession. But certainly everybody is taking price wherever they can.
Bob and I kind of joke around about this, but I will tell you that anecdotally from my particular food clients, pretty much without question, they're raising prices anywhere between 7 to approximately 15%. And Bob and I joke about this, but they're doing it without a lot of pushback. Bob came back and mentioned that of course there is pushback, and I agree, there is pushback, but they've been successful for the most part by increasing prices. And I will point out is that the CPI increase in the food and beverage for food specifically through September has increased for almost 5% year on year. And it's going to continue in the future. And the biggest leaders as far as price increases have been obviously the proteins, the meat, this poultry and the seafood are up 5%, almost 6% over last year, and 15% from 2019. And all of that is as a result of what Bob was saying, is those increases as a result of just labor shortages, supply chain issues, transportation costs are pushing these costs up. And I'm not sure I see it coming down anytime soon.
All right, I want to pivot from talking about the operational issues that you let us off with to talking about, obviously, Dawn, you mentioned this, but one of the big picture things that no one could get away from was the continuing impact of COVID in 2021. So I wanted to discuss that, both what happened in 2021 and what we see continuing into 2022. So Barbara, can you kick off with your comments on that?
Sure. Going into 2021, I think so many restaurants thought we would be post-pandemic. And I know from my point of view, I kept having all of these headlines. Here we're going to be post-pandemic. And at some point I stopped because it just seemed like we weren't getting there. And it's this continual, a new variant is coming out. How do we handle this? Vaccine mandates, proof of vaccines. There are so many things that were impacting the actual restaurant owners who are, they're the face of this, and they're dealing with their customers and trying to balance what their customers want, dealing with the employees that they do have and what their health and safety needs are, and kind of trying to understand all of this themselves, because they're not health people, they're not doctors, they're not first responders, but they have to be in the know to keep their restaurants safe, to keep their employees safe, to keep their businesses operating. So it's just been, I think, a more challenging year than we thought it was going to be going into it. And we'll see what happens in the future with all this. It just seems there's a new variant coming out all the time, and people want to know how does this move us forward in the industry.
And from the legal side, I think what we're seeing now is, especially in California and Los Angeles, the city of Los Angeles has introduced a proof of vaccine mandate that's one of the strictest in the country. And I know New York City has done the same thing. And so that really puts restaurants on the front lines of kind of enforcement, which I'm seeing have just raised a lot of questions and make it more difficult for the labor force that's already very, they're already very short staffed, and having to deal with being kind of the consumer facing checking vaccines, at least in Los Angeles, has been added pressure. I've seen a lot of clients kind of have questions about it and have difficulty with it. But we're seeing restaurants having to deal with proof of vaccine mandates and then generally continue to deal with enforcing public health mandates, whether that's masking or kind of other precautions. But restaurants, and now previously a lot of the public health enforcement was done through warnings, but now a lot of the ordinances on the local levels are in the enforcement phase, meaning we will that public health authorities have the ability to issue fines for enforcement, which we had not dealt with too much in 2021. And so I think that's something that we're going to see continuing to happen. And I think that also, Don had touched on this a bit, but balancing the needing to modify some aspects of service, whether that's hours, menu items, raising prices, or I've seen a lot of clients that have stopped have either restricted or entirely stopped delivery in order to accommodate in-person dining. And that's, I think, due to the labor shortage as well.
Yeah, there's a lot of restaurants who are, as you said, doing like a menu constrictions and kind of focusing on menu items where they can get the supplies and things that are sellers for them and make sense financially, and also that they're executable by the staff that they have. Yeah, I mean, the supply chain issue isn't going away. That I'm seeing that on the front lines from friends who own restaurants, that there are from all kinds of ingredients. A friend of mine owns a cheesecake place and couldn't get the crumbs, graham cracker crumbs, 1 week, and now there's a cream cheese shortage. So here's the time of year where he makes up a lot of income, and it may not happen because he just can't get the supplies. So there's just so many things going on that are impacting them, that they have to get creative with their menus and focus on what they can do on premise and off premise. And that may be two separate things. They may be able to do something when they have people there that's a little bit more, of an experience. And then kind of let the delivery see what they can do to make sure that they keep that customer happy, because that delivery customer may come back to be an on-premise customer at some point, and they're the same people as well.
And I do want to say that there is a Q&A feature, and there's also a chat. So I know that some people have started putting questions in the chat, and we will have a Q&A at the end. If you want to also use the Q&A feature, we will try to take as many questions as we can at the end of the program. What I want to now pivot to is talking about the big picture trends that each panelist is seeing for the food and beverage industry in 2022. So Bob, let's start with you. I'm just going to give everyone 2 to 3 minutes to just talk about some of the trends that you are seeing based on from your vantage point.
Sure. Well, there's certainly a lot of interest from investors and corporations in ESG these days. I assume everybody's kind of seeing that, the focus on sustainability and social impact. Private equity firms are assigning partners, to lead their ESG efforts. There are actually funds that are dedicated to social impact. So most companies are aware of this and spending more time on it, and the investors certainly are embracing it. I'd say secondly, in terms of, interest out there in particular companies, those that produce immunity products have seen a lot of demand. Immunity boost is a new term companies are using. So whether it's better for juices or other product supplements, there's been strong sales growth in those areas. Those are a couple. I'm sure other panelists will talk about some other topics, but those are a couple anyway.
Don, what about you? What are the trends that you are seeing from your vantage point in 2022?
So by far and away, we're going to talk about this in a couple minutes, so I won't talk about it right now, but that's plant-based focus. It's a huge trend. It's not going away, and as a matter of fact, it's getting bigger and bigger. So we'll talk about that in a couple minutes, but I couldn't agree more with Bob. Transparency is a big issue, transparency of products. Consumers are interested in learning more about where their food comes from and how it's made. So you see a lot of labels just to make sure that they know that consumers know exactly what's in the ingredients, and to not have their bars, whether it's snack foods or other types of products. They want to make sure that they know all the ingredients and it's good for you. What they're eating is good for you. They want to make sure that the labelings are clean, it's responsible, whether it's locally sourced or it's ethical sourced product. So that's something that we'll see in the future. I couldn't agree more on Bob on the immunity products. You're looking at, for example, people will again want to know, they're prioritizing, the pandemic is prioritizing health, and it's prioritizing immunity type products. 80% of consumers worldwide want something. They've committed to eating and drinking more healthily. We'll see if that actually happens, but that's what they're committing to. And whether they're looking at products that have more turmeric in there, that is a big, that offers just a big host of antioxidant and anti-inflammatory products and benefits, more zinc and vitamin C for immunity. We're seeing a tremendous amount of those type of products in the marketplace.
Barbara, what are you seeing?
Yeah, definitely couldn't agree more. I think if 2020 was the year of comfort food because we were all home and enjoying our grilled cheese sandwiches and stuff, now we're kind of getting into a corrective mode in 2021 and going into 2022. Yeah, I'm seeing a definite trend even on the franchise side in terms of who are making deals, and we're seeing a lot of things that have a wellness blend to them. But we're also seeing things that were maybe kind of unique and innovative a few years ago that now seem to really be on the finger, have the finger on the pulse. Something like a Brooklyn dumpling, which kind of has like a locker system, which is getting a lot of traction in like university areas and other areas, which is kind of going into the trends that we're seeing going on with restaurants that are franchisable and what people want to invest in the future. But definitely, we have an educated consumer. The internet is at their fingertips when they walk into a restaurant, when they walk into a grocery store, and they want to know what is in there, what is in their food, where it's coming from, and they're not going to stop. They want that answer. They need it.
And what I'm seeing on the legal side is an increase in false advertising cases related to food and beverage. 2021 was the most lawsuits ever filed related to false advertising. And that kind of connects with the trend that you all are seeing in terms of consumers wanting more transparency. We're seeing the plaintiff side lawyers are targeting food and beverage companies. And a lot of those claims now are related to health claims. So for all the companies that are capitalizing on kind of the immunity or health focus that consumers have, there's also just this kind of huge cottage industry of lawsuits waiting to happen if food and beverage companies, this is really more on the food manufacturing side than restaurants, but in 2021 there was a case involving P.F. Chang's menu labeling, and then there's been a pretty prominent legislation or litigation against Subway related to kind of the tuna fish sandwiches. So that is not going anywhere, and all food and beverage companies and restaurants that need to really understand what kind of claims that they're making on their labels and what potential litigation could be triggered by that, because that is something that we're seeing. Really, 2021 was the most cases ever. Before that, 2020 had set that record, and I think that 2022 will probably be the most cases ever. And that's really, those false advertising cases are about the nature of the ingredients, even depictions as to where a product comes from. So using a place in the title, like Hawaiian nuts, or and they're not made in Hawaii. Or there's been a huge increase in flavoring lawsuits, vanilla flavor, coffee flavor, where it's artificially flavored ingredients. And so every time a product gets popular, so in 2020 and 2021, there's a huge increase in sparkling water sales. And then there's also a corresponding increase in litigation as to the, whether it's natural flavors in that sparkling water. So we'll talk a little bit more about other legal and regulatory trends, but I think the false advertising really fits in with what you all are saying about consumer expectations, because as consumers are expecting more transparency, those false advertising cases are also trending, and the Supreme Court has really not shown an interest in kind of hearing challenges to those cases. And so that means that the Ninth Circuit is really setting the standard for how those cases are heard, meaning that if a nationwide food manufacturer is selling to everyone, there's going to be a litigation brought either in New York or in California, because the Second Circuit and the Ninth Circuit have set a very, I will say, a very low bar for what the reasonable consumer might expect, and that triggers false advertising cases.
Yeah, I would just add on behalf of many of my clients, these claims to them seem rather frivolous, but in our society, you can sue anybody for anything. But a lot of times they don't seem to have merit, but because of the cost and the distraction and everything else, they'll often be settled, just to get beyond it. So I think there are, unfortunately, some abuses in the system too.
Exactly. I couldn't agree more with that, Bob, from the perspective of settling a lot of what I would view as completely frivolous cases. So now I want to talk a little bit about some of the trends, two of the trends that we really saw in 2020. And I want to ask the three of you to give your thoughts on this. So one trend that we talked about at the panel last year was ghost kitchens. So can you all talk about kind of what you're seeing with ghost kitchens now?
Yeah, I mean, I'll start.
Barbara,
still going strong. Definitely a lot of investor interest, and they're making their headway into the public consciousness. So the public is really more aware of what a ghost kitchen is, and there's not as much of a fear of where is this food being processed and all of that. They're understanding what a ghost kitchen is. So it's just a trend that's going to keep going on. It really was accelerated by the pandemic, but it's going strong, and I expect it's going to go strong for a long time.
Yeah, I would just add, ghost kitchens are obviously the beneficiary, as Barbara said, of the pandemic and the increased interest by consumers on direct to home delivery of food products. We saw tremendous growth not only with restaurants but also with grocery in terms of e-commerce growth, and ghost kitchens obviously address that. Some people don't realize there's different kinds of ghost kitchens, by the way. There's a classic where they're renting out kitchens in a warehouse to third-party restaurants. There's some where they're actually operating the kitchens as a franchisee of the restaurant. There are host kitchens where companies are accessing their existing restaurant kitchen excess capacity. And then there's mobile kitchens where they're really in trailers and parking lots. So there's all different types. And as Barbara said, there's been huge, billions of dollars raised. I think that there should be continued growth, but it hasn't come without some challenges, that's for sure. There are operational challenges, getting permits, complying with regulatory requirements is not always easy. I think there's been some, examples where there's been accidents, there's been fires, there's been other issues. So they've got operational challenges. And then, the economics are still being proven, if you will. The costs are probably higher than they look on paper. There's shortage of labor like everywhere in the food supply chain. So I think the economics are still to be proven, and many of them are still not making money. But again, I agree with Barbara. It's a big growth sector for the industry.
And the other topic that I wanted to talk about, it's not really just the 2020 trend, but it is something that we talked about last year, is plant-based foods. So Don, can you lead us off on that?
Yeah, I mean, it's the plant-based area, the plant-based protein phenom, it's surging. It's getting bigger and bigger. It's forcing grocery store chains and whether it's a grocery store or manufacturers or retailers to quickly respond to consumer demands. I mean, everybody knows the big boys. You've got Impossible Foods, and you've got Beyond Meat, but you've got other companies, major companies getting into it as well. Whether you've got Tyson's or Kellogg's or Kraft or Hormel, they're coming into the plant-based area big time. And then you've got the fast food chains that are also being a big force in plant-based. You've got McDonald's and the McPlant. You know, whether you want plant-based burgers or chicken or tacos, you've got Burger King, you've got Carl's Jr., you've got Dunkin' Donuts, you've got Subway, White Castles. You've got a tremendous amount of fast food push in that particular area. The interesting thing to note is that the global plant-based value, the size of revenues, right now you're looking at about $30 billion in revenues, and it's estimated that by the year 2030 will be $170 billion in 2030. And that's a tremendous amount of growth in that plant-based area. But I don't want people, I want people to obviously know, and it's driving it as well, is that the outlook looks fantastic for plant-based, but there are still barriers. And the barriers is price. 70% of consumers aren't willing to pay that extra premium right now for plant-based, and that's something to be watched going forward. And then the quality. There's always the perception that plant-based foods maybe taste a little bit papery and it's dry and there's an aftertaste. So that's something to be aware of. The quality still on plant-based, and it's getting better, but that still needs to be worked on. But it's growing like crazy. And what's driving the growth is just the shifting of consumer behaviors. It's just prioritizing health and wellness and social issues into the plant-based area, and then continuing product innovation is driving that particular growth. Is that always in search of better tasting plant-based foods, whether it's soy milk, nut milks, or whether it's cheese, or other issues that are causing continual innovation in the plant-based space is driving advancement in that particular area. I'd love to hear from you guys, because it's such a big area, is the plant-based.
Yeah, I found just over the past 2 or 3 years how much more professional the actual messaging of the plant-based companies has been, so that they're getting their message across more. And obviously they're working with these big players. And restaurants need to have more plant-based options than just a salad on the menu now. Consumers want these products. They want to try them. And I do think the quality has improved if you go back over 10, 20 years, when there really was a lack of quality or lack of even offerings. But now you go into the supermarket aisles and there's plant-based things that are great. And people do want, it goes back with that whole trend of wellness. People want things that are good for them. They want to know where it's coming from. And that is one of the issues that you get into a little bit with the plant-based, is that there is some processing involved. And that is a concern to people. And I think the other concern you brought up is price. And it's going to be seen as we move forward, what people are willing to pay for. But, some of these things may be a treat. I mean, I'm not eating a plant-based hamburger every day, but I'm not eating a hamburger every day either. So I may make that choice and pay a little bit extra money, because when I do have it, I want to make sure that I'm getting something good and good for me.
Yeah, I would just add, I agree with the concern about some of these being somewhat highly processed. If you can combine plant-based with natural, that would be a winner for sure. And in the alternative dairy space, as Don said, some of the growth rates there are really exceptional. And I think over time that'll be a huge growth area for plant-based. we're involved with one now that has the alternative dairy. They also have fermented foods, which helps with gut health, which is a big topic these days, provides probiotics, which are popular with consumers. So there's a lot of growth in that area as well. So these products do have very specific health benefits. Anyway, just wanted to.
Well, not to mention increased investor interest. I mean, Impossible Foods raised what, $500 million in just a recent fundraise, or over $2 billion to date. So there's got to be there's an incredible amount of investor capital coming in the plan.
Oh yeah, and every week we see a new startup that's raised, some incredible amount of money without really any revenues or profits yet. So.
And one thing on the legal side with plant-based is that there have been a number of states that have put in restrictions on using the terms using meat and dairy terms on plant-based product. And so the ACLU has filed lawsuits challenging those labeling laws, basically for First Amendment violations, but they've had varying success. So it may be something that the Supreme Court takes up in either 2022 or more likely 2023. But the FDA listed as one of the topics that Congress basically sends the FDA a list of topics to prioritize in terms of issuing guidance. And they've asked the FDA to issue some more guidance on when things can be labeled as a milk or as meat. So that's something that the plant-based industry is going to have to see, because I think that's a space where the meat and dairy kind of lobbying groups have a foothold. It's not something that we really are familiar with in California, but in a lot of, but what happens in any state really for national brands can impact them throughout. And so that issue of proper labeling of the products and what they are allowed to be labeled as is going to be a legal fight that I see coming. So I wanted to, Don and Bob, you had talked earlier about some of the operational trends, the operational issues that came up in 2021 that we're going to continue to see in 2022. I wanted to have you talk a little bit more about additional operational trends that you see in 2022 that you may not have discussed previously, or give you the chance to go into more detail on those trends.
So I could touch on it a little bit, Bob, and then I'll turn it over to you. But just a couple of the trends, just operationally dealing with some of the challenges, whether it's supply chain or labor. I think a lot of companies that we're seeing, or I would advise companies to potentially go to more of a decentralized approach. So as opposed to having one area of bringing in all of their inventory, I think you're starting to see companies fight or deal with the supply chain by establishing smaller scale storage facilities nearer to their customers to be able to handle and to transport their product, to deal with some of the freight, some of the challenges on freight and the expensive freight costs. I think you're seeing that as well. A big recommendation that we have, and that I'm also seeing, is that it's extremely important to invest in relationships with your supply chain partners. If you don't have good relationships with your supply chain partners, you ain't getting product as fast as you'd like. So you've got to make sure that you can invest in those relationships. And then to go alongside of that, you're seeing companies lessen the concentration. So we've seen in the past where there was a huge concentration of just maybe one or just a very small number of supply chain partners. It's very important to diversify and to be able to work with a wider range of suppliers, whether it's regional suppliers or just to spread the wealth of where you're getting your product. That's going to help with the supply chain. And then lastly, in that particular area, is companies are also forced from an operations standpoint to reconfigure their space and to recalibrate their equipment to deal with the new normal. If you think that you're running business the way that you used to because of supply chain issues, you're going to run into some bottlenecks and you're going to run into some problems. We talked a little bit about some labor, some issues on the operation side on labor, and that is companies are using more overtime because they can't get the qualified employees that they need to have working on the line. And they're also investing a tremendous amount of investment in equipment and automation and even robotics, whether it's on the lines or whether in the picking fields if you're on the ag side. So those are some operational issues that I'm seeing that companies are dealing with or that we would recommend them dealing with.
Yeah, I would just add a couple of comments. I know we're running late on time, but I think private label, which is not a new trend, we've seen that grow really over the last several years, but I think it's going to continue to grow as retailers are trying to address all these supply issues. And I think to the extent the brands are taking price, I think you'll see some consumer pushback, and retailers may answer that with greater private label offerings. So we see that, and some of our branded clients are strategically looking for private label opportunities, still emphasizing their brand, but they're more open to private label than maybe in the past. So I would just mention that. I think we talked about direct to consumer. The other kind of area that has grown substantially during COVID is the frozen product category and other shelf stable production. I think as long as we do have noise around variants and so on, I think that will continue to be a growth area. I think the quality has really improved across the board there. And so for the right companies, I think you can offer a high quality, nutritious product, but one that may have some shelf life that the perimeter of the store doesn't offer. Ultimately, I think the perimeter is going to continue to be popular. Once we get food bars back and fresh back and all that, but in the short term, I think frozen and shelf stable will still be a growth area.
So Barbara, I wanted to ask, from your vantage point at MRM, I feel like you see everything. What are the trends that you're seeing for the restaurant industry in 2022?
Well, it's funny. I'm working on an outlook piece where I talk to experts and say, what do you think is going on in 2022? And the number one thing that they say is restaurants all across the board are going to make increased investments in tech, guest-facing tech at the table, back of the house, front of the house. And a lot of the cases, it's for operational efficiencies. It's to work with their employees to get things like schedules in front of them so they don't have to come in on their day off to go look in the back. So there's all kinds of things that they're going to be doing, robotics, AI. And it's fascinating to see how we've advanced so far in such a short period of time out of necessity. But that's the number one thing, is that 2022 is going to be this really big focus on technology and how it can help restaurants be more efficient. I think we're also going to see some cool things like virtual brands, which kind of had started with like Mr. Beast and a few other things, but it allows something that's a little kind of unique on the delivery side because they're delivery only brands. And it allows the delivery space to kind of have its own uniqueness that you won't get on an on-premise. So I think that's going to add some kind of uniqueness and liveliness to the delivery space. But mostly the big story is just going to keep focusing on tech.
Yeah, it's interesting. I've been helping a lot of clients with contracts related to that, and some of the contracts that I'm seeing are people are kind of so ready to invest in tech that they're just like signing contracts without really thinking about it. That they can bind them for a while.
Right,
So.
and I think they have to understand it. Not that every restaurateur needs to be that tech savvy and a real technician, but they have to understand what tech makes sense for their restaurant space. And tech has a lot of great advantages. The key advantage I see is the access to data, and what that data allows you to connect with your guest. So it can let you know things that you can personalize for that make that guest get connected to your restaurant. Most guests now are so tech savvy themselves that they want to relate to restaurants on that realm.
And I want to talk a little bit about the legal and regulatory trends that we're seeing for 2022. So one of the most active agencies has been the FTC, and that they have really taken a stand towards having more enforcement measures and to just being more active. So they sent out an open letter to a huge amount of companies about warning them about penalties for false advertising through reviews, essentially warning them about the practice of fake reviews. And that included a lot of food and beverage companies and third-party delivery apps as well. So there's been a focus. I think it's the most active I've seen the agency in the past 12 years of practice. So it's pretty interesting to see. They're enforcing the Made in USA rule. They're for manufacturing. They're enforcing and they've essentially said that they're going to focus on any type of consumer-facing subscription-based service is also kind of on notice. But they're also looking at claims for immunity and health benefits of products, and specifically related to COVID immunity, they issued warning letters and took enforcement actions against dietary supplement companies that were making claims that their product could help with resistance to COVID. Separate from the FTC, the Department of Labor has reversed course essentially from the Trump administration in terms of tip pooling. That doesn't affect restaurants in California, but it does have a pretty big effect on restaurants in the rest of the country. And we're seeing an interesting trend, and it's really state by state. So in some jurisdictions, there are high requirements for proof of vaccine. So San Francisco, Los Angeles, New York City are requiring restaurants essentially to be on the front lines of having consumers show a proof of vaccine in order to, particularly to eat indoors. But then there's other states like Florida in which any kind of vaccine check or vaccine mandate is unlawful according to state law. So I think that's going to be a huge issue that we see, both proof of vaccine for customers and requiring employees to be vaccinated is something just from an employment side that's probably the number one thing that I get asked questions about that's kind of employment related. So there's a conflict between kind of proposed federal laws, state laws, and sometimes local laws, and the food industry, both on the manufacturing side and the restaurant side, is really at the front lines of kind of navigating that pretty thorny legal issues. So and I think that there's generally a trend towards increased minimum wage. The city of West Hollywood recently passed an ordinance that will make West Hollywood the highest, will give West Hollywood the highest minimum wage in the entire country. So that's another kind of trend I'm seeing in 2022. And I want to pivot now to talk about deal flow and deal environment trends. So Bob, can you talk a little bit about what you're seeing in the industry?
Well, let me address that with Bob, if you,
sure.
Pooja, if you don't mind. I got a couple of questions for Bob, and
perfect.
Put some challenges or questions to Bob, since you're our resident expert here on deal flow. Pooja and Barbara touched on just the fact of food tech. I mean, food tech basically raised $10 billion in 2021 just on VC funding, and it continued to be bigger. It's been robust. The deal flow has been extremely robust over the last couple of years. How long can this trend continue? Do you see any slowdown in the food and beverage area and food tech? You're on mute. Bob, you're on mute there, buddy.
But as you said, it's been a crazy environment for several years, but 2021, in fact, is clearly going to be a record year. Most firms like ours are having our best year ever. Most service providers like your firm, Don, and your firm, Pooja, are very stretched, and it's very hard to get a Q of E done, for example, on a transaction. And it's been a record year for leveraged buyouts. I think I read over $1 trillion of buyouts, which is twice, the next highest year. A big driver has been this year has been, at least early on, has been the seller concern about, rising capital gains taxes, which was certainly part of the Biden platform. I think as time has gone on, there's seemingly less concern that that's going to happen, or maybe it'll happen in smaller amounts. But that really drove a lot of the seller activity this year. I think there was maybe something of a little bit of a slowdown in terms of newer stuff in the fourth quarter because of that. But for most firms, the pipeline continues to be very strong for next year. I know we have one of our biggest pipelines going into next year. And on the demand side, there's still tons of capital out there with private equity firms, and corporate balance sheets are very liquid. The debt markets have gotten stronger. So there's a lot of demand out there. I think from the supply side, there is a pipeline, as I said. I think for sellers, it continues to be the case that with COVID happening, they want to get something done. I think they've realized how fragile business can be when you have an emergency situation like that. So we think there's going to continue to be a lot of activity going into this year. I think that there are challenges in certain segments of the food sector, which have restrained the interest on particular sellers. But there's so much capital out there looking for transactions that we've been able to find interested parties on deals that did have some challenges because of COVID.
So even with challenges that we talked about earlier, whether it's supply chain or labor or inflationary prices, how do you see the value of some of these companies, and will the values be affected in some of the deal flow going forward?
Well, as I indicated, in some cases, these COVID impacts and the margin pressures that we've talked about have impacted companies, and I think there have been. It's interesting. In many of our processes, I'd say there are fewer bidders than maybe we experienced pre-COVID, when some folks were bidding just to kind of get into the second round. Now, I think we see fewer bidders because of some of the interesting challenges here, but those who do bid are seriously interested. So, we don't have to question really why they're at the table. They're there because they really believe in the story and the company and the opportunity, even though, there's again, some challenges the company may be facing. And as a result, really the valuations have continued to be very strong, very, very robust. So it's a different market than before, with, again, fewer but more serious bidders that are keeping valuations up. I think the biggest challenge in many of these discussions is, what is the sustainable earnings of the company? Because of COVID, in many cases, sales went up dramatically, and in some cases, they went down significantly. And with these margin factors and then price increases, what really is the sustainable earnings of the business? And that ultimately is something that's being asked and discussed and analyzed on every one of these processes.
You bet. Just super, super brief. Is there any what I call favorites in the food sector versus others as far as deal flow?
Well, I think as we've already talked about, strong interest always in better for you situations that really do address the consumer demands. We've seen, interestingly, growing interest in ingredients. Ingredients are viewed favorably by investors as and this is where you're supplying another food manufacturer. We've seen, a lot of interest in those deals, because the view is, once you get spec'd in with those manufacturers, it's a very sticky business, and unlikely you're going to get switched out. And hopefully multiples, although I don't think that's the case anymore, multiples are more reasonable than these high-profile branded companies. And on the restaurant side, it continues to be quick service and fast casual are the darlings. I think full service will come along, the big comparison everybody is asking in restaurants is how did you do versus how did you do this month or last month versus the same month in 2019. That's really the comparison everybody is looking at. But for those folks who have been able to maintain some of that off-premise business they got during COVID, and they're starting to see some of the in-store dining return, those are the popular concepts for buyers.
Excellent. Thanks, Bob. Let me turn it back over to Pooja.
Thanks, Don. And just really briefly, so that we have time for the Q&A, I wanted to talk about the, just have a brief discussion, and I'll ask Don and Barbara to weigh in as to the potential impact of some of the Biden administration's proposed legislation. Like we've been hearing about the Build Back Better, we've been hearing about potential tax issues. So, and another piece of legislation that's just been really waiting around is the Restaurant Revitalization Fund replenishment. So let's start with you, Don. Can you talk about what you're seeing in terms of the effect of the potential new legislation on food and beverage? And then I'll ask Barbara to weigh in specifically on the RRF.
Yeah, just super brief. You know, obviously, so the big ticket items such as tax increases, I don't think that they're really expected anymore in the final version of the Build Back Better plan. We keep our fingers crossed whether that's going to actually happen. The passing of the plan will be done by year end. It doesn't look like it going forward. I think that's going to stretch into 2022. The current plan has a fair amount of green energy tax credits. So for those companies that are investing in their facility, whether it's to put on solar panels or other energy efficient improvements, there's going to be opportunities for food companies to take advantage of green energy tax credits. And lastly, the framework will provide resources and incentives to farmers and to ranchers and to other owners, just in effort to support their efforts to reduce carbon emissions. So those are some big ticket items for those companies that are actually involved in those initiatives, at least on the food and beverage side. Barbara.
Well, there's a lot of interest, I guess, in the Restaurant Revitalization Fund, and I think it's building and growing. Alignable has these really great stats that they've put together over the past few months about how many restaurants haven't been able to make their rent. And it's kind of scary when you look at it. And they just came out with something that said like 66% of restaurant owners are saying, hey, government, we need more money. I think the implementation of who's going to get the money, how much they're going to get, that's what the holdup is. But there's, I'd say in the past few days, I've noticed a big push from the lobbying element that people want restaurants to be eligible to have more funding. And also on my site, the Restaurant Revitalization Fund has become one of the top 3 search terms. So I'm seeing a groundswell of support for restaurants to get some kind of relief more going into 2022.
Great. And just as we wrap up getting into the noon hour, there was 2 questions that came in that I just want to pose. So the first question is, given supply chain effects on price increases, what do you think are the possibilities / likelihood that increased prices will recede in a year or so when things get normalized?
I don't know if that's going to happen. Anecdotally, obviously, when things get normalized, prices should start dropping. We'll see if that truly happens. I think that may be in 2023, but I think that we may not see the downward impact on inflationary prices for quite some time. At least that's my opinion.
Yeah, I think that's right. I think in mainstream restaurants, I don't know, I rarely see price decreases. I think, where you may see it though, if there truly are some gluts developing is in some of the alternative channels, whether that's dollar stores or those types of channels. But I don't think to me, there's always going to be pressure from ag prices, from meat prices, and other commodities to keep mainstream pricing pretty high.
Agree.
I have heard of a push on the restaurant front for more of a dynamic pricing that could kind of be like what they do with Lyft and Uber, where based on what supplies are available at a certain time, kind of the farm to table thing that the price of a thing could be less based on a time of day or something. But I don't know how much traction something like that is going to get, because it seems like it'd be very difficult to implement, but it's an interesting concept.
And unfortunately, we won't have time to get to the second question just because we're right at the noon hour and I want to end on time. Thank you so much, all of the panelists, for joining and providing your insight. I think this was a great discussion again, and we'll see what's ahead in 2022.
Looking forward to it.
Thank you.
Yes.